Good morning, good afternoon, or good evening, depending on where and when you're watching this. I'm your host, Chase Majerus, and this is your weekly economic update on This Week Today, sponsored by Mutual of Omaha Mortgage. It's the first day of October. Playoff baseball begins, Mother Nature turns on the AC, people line up down the block for pumpkin spice treats, and of course, we get Halloween.
Look at, it's freaking bats. I love Halloween.
But also, this time of year usually signals a slower housing market. And last week specifically, the FOMC meeting took place. So let's jump right into that on This Week Today. Federal Reserve officials announced Wednesday that they would be raising interest rates for a third time this year by a quarter point to a target range of 2–2.5%. The Fed fund rate is now at the highest level since October of 2008, just after the collapse of Lehman Brothers and the beginnings of the financial crisis. Fed Chairman Jerome Powell and his colleagues are attempting to engineer a soft landing of the economy by raising rates just enough to prevent overheating.
It's like a sauna in here.
But not so much that they trigger a recession. The Committee of 16 continue to anticipate 3 hikes in 2019. 2019? Man, don't talk to me about 2019 yet. It's so far away. By the time that comes around, I'll be old enough to be in the FOMC. Just because summer's over doesn't mean we can't flex those gains, bro.
Today is Monday, International Chess Day, the most glorious day of the week.
The economy continues to strengthen like it's getting ready to fight McGregor. Home values continue to appreciate, and that means homeowners are raking in the equity. Just like the way you're going to make your kids rake the leaves, am I right? Get it? Because it's fall. A report released by CoreLogic showed that home equity rose 12.3% year over year in the second quarter of 2018, meaning that the average homeowner saw their equity increase by $16,153 in 1 year's time. $16,000. Think about what you could buy with that. A bunch of puppies, an extravagant vacation to Greece, or more seriously, put that towards a retirement fund or pay off your student loans. Or if you're like me, you can get music equipment. We've seen markets go up, down, sideways, and around again since 2008. Homeowners could now be in a good position to tap home equity, so seize the opportunity before it's too late. This story was a bit of a last-second addition, like my pickup of Jordy Nelson on my fantasy football team, but look, it's important. The pending home sales index is a widely watched indicator of the housing market, and for the 4th month out of the past 5 months, it has fallen, this time by 1.8%. Sales dropped a whopping 11.3% year over year in the West, where prices are highest. Sales have been hampered all year by a very lean supply of affordable listings, so let's just call this more than just an isolated incident. Welcome to the Economic Calendar Update on This Week Today. Let's check the board. On Monday, we'll see data on construction spending. Tuesday, FOMC Chairman Jerome Powell will speak at the National Association for Business Economics. Wednesday, no shock, mortgage application data, which has been a little dry. Then on Friday, with perhaps the most closely watched economic indicator, the employment situation. Before I let you go, if you have any articles or topics that you would like me to discuss, just leave me a comment in the comment section below. I'd be happy to do the research. Thank you for joining me on This Week Today. To learn more about Mutual of Omaha Mortgage, check out mutualmortgage.com. I'm your host, Chase Majerus. You can find Mutual of Omaha Mortgage or myself on Facebook, Twitter, Instagram, or LinkedIn. Have a great week, everyone.